moving average is why the moving average is being used like that is because it is used in conference with other things, but because we're talking of indicators now, so I want to talk about them one. So why the moving average is being used as a dynamic resistance, as you can see here, it is the dynamic support here. The market came down to this point, bounced a little bit, giving us an immediate reaction. It sold and bounced immediately. Came back again and we began to see wicks reactions here. All this long wick reaction. And the next thing you saw is a buy to the upside. So if I'm to use that same style here, on this part, I'll have to wait for the market to come down here. Maybe we'll see something like this. There may be some little reactions. And if I see a candlestick pattern, I might decide to buy, maybe to this level. Decide to buy it to that level. Now, this can be a very huge delay. This is a daily chart. Every candle you see here represents 1 day. So imagine how many days it will take you. Let's assume this moving average starts moving up. How many days will it take you for this candle to drop down to this point before you take a reaction? And do you know how many days it will take for a signal to come up from that level to know if you are going to buy or it will keep selling? Because even at levels of support and resistance, it is only levels. That's why we call them level. But it is not 100% guaranteed that the market will change direction from there or it will continue from there. An example is this, as you can see, when the market got to this part of the moving average, first it came, it showed a reaction, it slowed down, it came, showed another reaction, went back, came, showed another reaction, went back. Some other persons would think the forthcoming is a boom. But what did you see? It came down and it broke that level. It came down and it broke that level. Instead of becoming a support now, it turned into a resistance at this level. It turned into a resistance at this level. Why? It went back up and we're seeing a drop. It went back again and we see another drop. Please, are you following me? Are you with me, guys? Or am I going faster? Am I too fast? Are you following me? Are you with me? Okay, then. If I'm too fast, let me know. Because I will have a lot to cover. We're just still on moving average. Okay. So if now we have this happening. So to make use of the moving average efficiently, what you do is this. To make use, don't worry. What's his name? Monday, right? Yes, Monday you will still get it. It's practice. It's practice. It might look like magic now, but with time. Now, when we get to, if you want to use the moving average for directions, make it be for directions only and do not use it for support resistance if you know you don't have. And the moving averages can still be adjusted. It is a matter of you working around the different moving averages I gave you. Now, let me end with what we're working on initially before I start this new one. This is the moving average for the direction. I have seen that price is higher than the moving average, so I assume the market to be bullish. Following what the moving average is saying, I'll have to go to my 1 hour time frame and see if I am having the same outcome too, if price is bullish on that part. Now, when I go to the moving average, what am I seeing on 1 hour? Price is below the moving average. What do I need to do? Always remember this, that the higher time frame tells you the story of the market. Whatever you see on the lower time frame is just noise. It is the higher time frame that will tell you what the market is doing. Anything you see on the lower time frame is noise. So I will have to wait for the market to move above the moving average, to go above the moving average, then possibly come back to, that is if I'm using the moving average as my support resistance, possibly come back to my moving average support resistance. Give me a candlestick pattern around here that is going to say, okay, I think we're ready to go for the buy. And I might enter for the buy to take profit around here or around here. To take my profit around here or around here. So that is where the part of patience comes into play. You need to be patient for the market to play out. You need to be patient for the market to play out. Do you understand this part now? Now, I wanted saying something that if you're using the moving average, there are different settings for the moving average, like I said. Let's change this moving average. Let's make it something smaller. Let's make it 50 EMA. Look at it. Let's go to the daily time frame. This is 50 EMA. Look at the reaction. We are still bullish on the moving on the daily. Go to the 1 hour time frame. You can see there's a big there's a tight up between the moving average and price. There's a tight between the moving average and price. Sorry. Between moving average and price. Now we're seeing the moving average entering. We're seeing the moving average entering into price. See. Okay, I think we have some other reactions here too. Okay. We have one here. Yeah. Now, Now, if you are using this, that is why you can't use it as a support level. Use it for direction on the higher time frame, and you are good. Just use it in, okay, price is above the moving average. I think we're in the buy market. You go down to the 1 hour. Under the 1 hour, this is where you have to find your support and resistance level. You have to find your support and resistance level. And one very thing that will show us how to plot support and resistance level is the Fibonacci. The Fibonacci indicator, the Fibonacci indicator. Now, how do you bring a Fibonacci into play? This is it. This is the Fibonacci icon here. The Fibonacci icon here. So all you need to do is click on it. And now, before I draw it, let me put it this way. Now, before you ask me, why am I drawing? What's this? What is it? What's this I'm drawing? That's what we call Fibonacci, but I'll explain something up to you. The Fibonacci has levels that comes with it automatically. It has levels that comes with it automatically. I have adjusted my own, I've twisted it. But normally when you open the Fibonacci on your charts, this is a customized Fibonacci for me. When you open your Fibonacci on the charts, you would find something like these levels on the Fibonacci. You will find the 0.25 level. You'll find the 0.32 level. You'll find the 50% level. You'll find the 62% level, which is 0.62. 0.62 level. You will find the 72% level. You find the 100% level. Put this 100% 0%. So you find these levels naturally on the Fibonacci. If you open up your Fibonacci on your screen, this is what you will find. Now, at levels of the strongest level of Fibonacci starts from the 50% level downwards. 50% level downwards. Now, to put your support and resistance using the Fibonacci, you can do that manually. If you want to use the Fibonacci, good. For those who were here when I talked about trend, I said the market move well in a zigzag pattern. market move in a zigzag pattern. Now, for you to identify the possible area of your support and resistance using the Fibonacci, you have to make use of what we call range. I have to use what we call range. Range in the sense that, or we call it swing points. Let me use the word swing points. We call them swing points. We need to use what we call swing points. Now, these swing points are areas in the market where swing points are areas in the market where you have to mark. Let me say this is a swing point. 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 This is another 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 swing point, and this is another swing point. Do you understand that now? So in marking all of those swing points, you need to draw your Fibonacci from one swing point to another swing point. Now look at this, what we have on the screen now. Let me go back. Look at what we have on the screen right here. Let's identify the swing point here. Here is a swing point. 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 Let's see. Here it comes down, goes up, comes down. Okay. Here is a swing point. Here is a swing point. Why? The market went like this. Then it went like this. So currently, we are on a swing point between here and here. Can we all see this? Can we all see this now? Can we all see this? We're on a swing point between here and here. Good. I only have how many people saying yes? Please, are you guys following? You need to watch the recording of this video, please. You need to watch the recording of this video. It might look confusing, but we have a very short time. So that's why I'm trying to shorten it. I'm trying to cut the process for us. Okay, which point? This one here? All these ones? Do you mean this point in between, Samuel? Yes, the reason why that point doesn't count is because this. If you see everywhere we have marked, I picked here, I picked here. I picked here, I picked here, I picked here. You will see that when it came down here, it reversed and this place went up. It did what? It passed this level, isn't it? It passed this level. So this is our new level here and here. And you see that when it came down to this point, it took out this level a bit with this and it went up. Now it passed this level. And if you look at where it ended, it stopped here. From here to here, has anything gone past this level or gone past this level? Good. So that's why we're picking that range. That's why we're picking that range. You understand? That's why we're picking that range. That's why we're picking this range and this range. Nothing has gone past them. Now, because that's our recent range, and that is where we'll be drawing our Fibonacci from to get our support and resistance. So if I click on the Fibonacci, because we are going higher, because we are in the uptrend, I'll be taking it from the bottom to the top. From the bottom to the top. From the bottom to the top. As you can see now, from the bottom to the top. And where is price? If you look at it carefully, you will see that price is below the 50 moving average, like I told you, which is here. Price has fallen down to this part, to the 50. It has fallen below 50%. And if it falls anything below the 50%, because we are buying, we are expecting price to fall to maybe 50, 62, 70% level. Give us a price action candlestick pattern here. then we'll see it go up before we can say we want to buy. Before we say we want to buy. Do you understand? Before we say we want to buy, it has to drop below. If for a buying market, let me state this clearly for you guys. For you to buy within a range, buying within a range, let the market drop. Let the market drop to the 50%. Let it drop to the 50, 62, 72% level before you take any action. And before you take any action, make sure you see a candlestick pattern that suggests or that supports price moving back up. Price moving back up. That suggests price moving back up. Why? Because we are fulfilling this price move of this. This is what we're doing. Our zigzag pattern. Our zigzag pattern. Everything you see inside here is noise. Everything you're seeing inside here is noise. This is where a lot of people lose money. A lot of people lose money inside this place. Why? Because they'll think it's selling now. It will start buying very soon. As you can see from here, let me clean. The chart looks rough. See it here now. It got to this part, they'll think it will sell to the 50%. As you can see, it fell into the 50% level. It went back up. Did it go past this place? No. It came down again. Fell into the 50% level, went back up. Did it still go past this place? No. Came down again. Went back up before we saw this final push. Now it has fallen deep. We call this a deep retracement. We call it deep retracement. Anything that has gone below the 50% level is called a deep retracement. Now, something might possibly happen. It might continue falling. And if it falls and closes below this place, if it breaks this place, what will you be expecting? Let me clean this thing. If it falls below that place, what should you be expecting? Anybody with a suggestion? God bless you, Kashim. Sell. God bless you. God bless you, Monday. If it falls below this place, it tells you you should be preparing for a sell. It's saying you should be prepared for a sell. It's saying you should prepare for a sell. And before that can happen, we want to see something like this. Come down here, give us a price action. If it doesn't, you might see something coming down that will have something like this. And when you have something like this, all you need to do is to pick this place as your high, this place as your low for your Fibonacci. Let's do that. I'll wait for the market to do what? To go down to this part, to this part, this part, this part, this part. Give us a price action candlestick pattern to support our sell idea. Support our sell idea. Your first take profit should be where? The 0% level. That is your process, your starting process, your starting, your origin, your starting point. Because that is the certain and assured place where the market should come target first before even saying if it will go down or it won't go down again. Like what we're looking at here now. Like this buy we're looking at. Let me close this. This buy we're looking at it from here to here. We're expecting the market to drop, to come down here. And our first place of target will be this place. Our first place of target will be this level. So we should expect something like this. Every other thing you are doing is extra. Every other thing is extra. So your target should be around here, and you go enter. Now, we've stylishly talked about entry and stylishly talk about take profits, but we've not talked about stop loss, which is our exits. Now, in exiting, like I said, you can use the Fibonacci among the list I gave you. I said you can use the Fibonacci to exit. How? This is where our Fibonacci started when we were going bullish. We drew it from here to the high here to go bullish. And if you're entering from here, by you putting your Fibonacci here, you can put your stop loss here, trusting that price can come back down to take you out. If price comes down to take you out, it means your analysis is wrong and you should wait on the sideline to see what the market wants to do. If it wants to continue going back up, it will tell you. If it wants to keep going down, if it wants to start a new trend going down, you would still be able to identify that. So once your stop loss gets hit, you stay on the sidelines and reanalyze. Stay on the sidelines and reanalyze. Do not say, because it has hit my stop loss, you stubbornly want to enter again. That is where trading psychology comes into play. Understanding that you can't win the market. You cannot win the market. The market will always win. And the only way you can win along with the market is to follow what it does. Understand the big picture and try to follow that. They'll always lay their footprints. They'll always show up their footprint. So a good place to place your exit or your stop loss is here. Mind you, when we talk about exit, we're talking about stop loss and take profit. Stop loss and take profit. If you are placing a stop loss, which is a form of exit, a good place using the Fibonacci is down here. For your take profit, which is another form of exit, a good place is here. So you see, we're using the extreme ends of the Fibonacci for our take profit and stop loss. Extreme ends for our take profit and stop loss of the Fibonacci. Do you understand this? Do we understand it? Do we get this? Are you guys with me? Okay. Anyways, I'll add another ebook on Fibonacci for you guys, but that book is quite it's a very big one. You need to find out time. You need to create time to get into the deeper picture of how to use the Fibonacci. If you become a master of Fibonacci, you should be good now. Because Fibonacci is an easy tool to use, and it gives much. It's an easy tool to use. All you need to understand is market direction, when to apply and when not to apply it. So I'll drop that ebook later on in the group for you guys to use and go through it and this make research on what we've just done. Which other okay, I said we're not going to talk of the MACD because the MACD is a complex one. So let's hurriedly do something on chart patterns. Let me share my screen. We're having time. These things are a bit complex for us to just spend 1-2 hours on. Now, for chart patterns are on chart price action patterns that have a higher than average probability of follow through in a particular direction. Most of you, while trading or when you came across trading in one way or the other, you've heard about something like M pattern, W pattern, butterfly pattern, crab, butterfly, crab. You've heard of Gantt patterns, All of these things are price action patterns. We call them Forex patterns. Forex patterns. I remember when I started, I think I was using this majorly, M and W patterns, M and W. Now we call it M and W, but in other terms, they call it double top, double bottom. Double top, this is a top, this is double bottom, a bottom, and another bottom. So some call it M and W, some call it double top, double bottom. Double top, double bottom. So let's continue. Now, in chart patterns, we have majorly two patterns. We have the continuation chart patterns and the reversal chart patterns. The continuation chart patterns and the reversal chart patterns. Now, what are chart patterns used for? Now, as the name implies, continuation chart patterns. If a trend is bullish, let's say we have a bullish trend. It will get to the point where we'll be seeing this, like we're seeing a reversal to the downside. We're expecting maybe, we're anticipating if price will go back up or it will break this level. On coming down to this part, it will give you a form of chart pattern if it's going to go up that will support the market to go bullish. It might just give you something of this nature, tiny bits of price move. And the next thing you see is a boom to the upside. Or, let me clean that part. Or you might see something of this nature. And the next thing you see a boom and a drop, thereby breaking this. So your ability to identify these patterns will help you add clarity. That was why I was talking about confluence. In trading, you don't take one judgment. Like you don't judge from just one tool. You add those tools, the outcome of all tools together. If you're a Fibonacci trader, you add Fibonacci. If Fibonacci saying we're going up, if yes, okay. What is moving average say? Moving average saying we're going up, okay, yes. What is RSI saying? Is RSI saying we're going up? So your ability to understand these patterns, these indicators, instruments added with the chart pattern will give you a high probability win rate. A high probability win rate, because why? You won't just be taking trades out of one conclusion, but you'll be adding at least three. At least we need to have three confluences of these tools. Three confluences of these tools. Before we take a trade. And another tool, but I didn't call it a tool, is the tool of multi-time frame analysis. Multi-time frame. It's also a tool, it's also a skill. Your ability to combine 2 to 3 time frames together. Ability to combine 2 to 3 time frames together in conjunction with every other thing you'll be using. In conjunction with every other thing you'll be using, your chart patterns, your Fibonacci, and the rest of it. That should give you a high win rate. So back to our continuation pattern. So you see something now, the price is bullish. If you find something like a chart pattern that will support or negate if we'll continue bullish or the market is going to drop. If the market is going to drop, a chart pattern will come in that form that will go past breaking structure, and the next thing you see is a pullback before we begin to see this happening. Something will happen around here. You can see something of this nature happening too. We call this a head and shoulder pattern. These are shoulders. This is the head. You're looking for market to come break in the neckline. We call this the neckline. I'll show you a diagram soon about them. Show you the neckline, and you're waiting for this to happen. These are chart patterns. It happens. You see them on the charts. It's just your ability to recognize them. That will be a little issue. Now we have the reversal chart patterns. The reversal chart patterns gives you a clear move to say, okay, is this market going to reverse at this point or at this junction? And these things happen at areas of support and resistance. They happen at areas of support and resistance. You can't just find them anywhere. It happens at areas of support and resistance. Let's make an example. Let's say this is a trend. This is our support area. Let's say our resistance area. The market will go back up. On a lower time frame, you might see something like this. And a drop. And a drop. Now, when you go to that lower time frame, your ability to recognize that this is a head and shoulder pattern. All you're waiting for is the market to close below this area. It will come down. Now, you'll be expecting what? A little pullback, a pullback into that zone, and you sell, and you target where? Here. Because those are the levels you can see for now. And you target that zone, market will drop. Now, this is a reversal pattern. This is a reversal pattern. So let's go deep into a little bit deeper into the types of chart patterns, what makes up a reversal, a continuation pattern. Now, under the continuation, common continuation pattern, we have the flag patterns. Now it looks like a flag. It looks like a flag, something like this. Now, price acts like this in that manner. Price goes like this. We have something like, let's see, okay, up, down, up. And the next thing you see is this. There'll be what we call breakout. The price will just break out of it. Let me redraw it again. So we have something like this. We have something like this. And something like this. We begin to see accumulation of this manner. And the next thing you see a breakout. Now, if you merge these lines together, it gives you something like a flag. That's why it's called a flag pattern. But mind you, where is the market coming from? It's coming from what? A bullish source, a bullish origin. It has already created higher highs. It has created higher highs and higher lows already. So this is just a little consolidation or accumulation. Then we'll have a breakout to the upside. That's a continuation pattern. Bullish flag. The bearish flag, just the opposite of it. We're in a downtrend and the market comes and start doing this. It's not going up, it's not higher than this leg. As you can see, it's not going higher than this leg, it's just within it. It creates something like a flag, and the next thing you see, a boom to the downside. Call that a breakout. It breaks over to the downside and you expect a pullback before you enter. That's a bearish. Then a bullish wedge looks like this. The market comes down. No, that's the bearish wedge. Let me change my. The bullish wedge, the market goes up, comes down. You get to something like this. Now, like this, sorry, can't draw. You get something like this. They look almost the same thing with the flag, but this one looks like a triangle. And the next thing you see a continuation to the upside, a very big breaker. Sometimes it might not break out that big. You might just see something like this. I mean, you just go up a bit, come down to retest, and it starts the bullish trend again. So at this point, for those who don't understand what the market is doing, so many people will be entering and losing money here. Enter, lose, enter, lose, enter, lose, enter, lose. So your ability to stay out and be patient and understand that this is a consolidation, a range, I shouldn't partake in that. Should give you a heads up until you see that breakout. So also is a falling wedge that is falling. See, now we begin to see this. Gives you that pattern like a triangle, and the next thing you see, it move to the downside and zoom itself. So all of this happens at areas of support and resistance. Like I said, when you map your area, your support and resistance, you would see them forming at that point. So you can add these tools together and form a strategy that you will be comfortable with. So just take them piece by piece, master them, then put them together. Now, these are common examples of chart patterns. Common examples of reversal chart patterns. Now I made mention of the head and shoulder. And we have the bullish, bearish head and shoulder. When you see a bearish head and shoulder, when you come across a bearish head and shoulder, we can also call it an inverse head and shoulder. The bearish head and shoulder, no, this is bullish, this is bearish. The first one is bearish, this one is bearish. The market will come down, go up, come down at an area of support and resistance on the break of this line. As you can see it here, see it now. Breakout and trend reversal. On the break of this line, it has confirmed that. So you expect this to happen. Same thing with this one. It was selling initially, it sold, went back up, sold. Then we have this. The next thing we have this, and the market went up, broke out the neckline. So you should be expecting something like this to start happening, which is a bullish trend. So you can pick three, four reversal chart patterns, continuation chart patterns, master them, and just add them to your tools of arsenal when you'll be making formulating your own strategy. And for those who won't be able to, maybe you'll be finding it difficult, I'll post, let me see, how can I do this now? I would love to give out a simple strategy that you can start using and you start working out until you get to do what, understand how to formulate your own strategy. I'll work along with you. So as many who would want to work with me on getting your strategies, you can ask me questions privately. Just DM private WhatsApp me, then we'll get along and see what you're learning and how you're learning it. Then we'll work out something. Privately for you. Do you understand? But meanwhile, I'll drop a strategy tool in the group that we can all use, and probably with a video demonstration and how to go about it during the week. We should have something we can work with during the week. So I hope that's good. That will be good for us, guys. I hope that will be perfect. Okay.
Yes.
All right then. So on the bearish, working with this now, the bearish head and double top, double bottom. If I want to advise any newbie, this is what I want you to do. Your first chart pattern at all, if you're going to learn chart pattern, let it be double top and double bottom. Double top, double bottom, and stick to it. It's very easy to recognize on the charts. Double top, double bottom, M and W pattern. M and W pattern. This is N. Oh, where's my? This is M. This is W. So all you need is a breakout of this neckline. Let me see if I can find any on the chart. Let me see if I can find any on the chart. Okay, I think we've seen one. Now, this is what we're looking at this. That's a breakout of a neckline. We're expecting this to happen, and probably a sell to the downside. Now, let's see if we can find W pattern. There's another W here. I just saw that W now. Let me take out this. There's a W here, and I think that W gave us little profit. Okay, here, this is one. Okay, where's my pen? See a W now. Ah. See a W here. There's a break of this, but this W didn't. See the origin of our W. Now it broke out this. It was supposed to come down, retest at this level, and boom, but it didn't go up, as you can see. So maybe if you had entered it from here, you entered it from there, just take a couple of my profits. That is, if you're watching it, couple of profits and you're out. You're out of it. You're out. So it happens at areas of support and resistance. Let's mark. Let me find a particular area of support that we can use. Okay, this is a support level. Let's go to the 1 hour. See if we can find something there. Now look at it. We have if you have this, and this. We have our breakout here. The market came down, retest, and you see boom, profit. Profit. Can you guys see this now? We have our first leg, second leg, down leg. So this is our double bottom. Market went up, closed above it. We expect a reversal, a little pullback into our region. And here we are. So our first take profit will be here. Our second take profit will be here. Will be here. TP1 here, TP2 here. Or you could say TP1 here, TP2 here. Because this can act as a resistance. This point here, TP2 here. Now, at every point of support and resistance, draw your support and resistance from the higher time frame. From the higher time frame, from the daily, from the low, from the daily, from the H4, 1 hour, and that. Now, this is another support and resistance here. This level here is support and resistance. Why? That's a support that the market went up, came down. Now, there are places of swing highs and swing lows. That's advanced, but somehow we'll talk about them. The identification of swing highs and swing lows and swing points. Sorry, there's an advanced technique to that as well. We'll talk about that. So let's assume this is our resistance. That's our support level. Let's go to the 1 hour and see if we'll have any chart pattern around there. Oh, go. Okay. Now this is what we have. Market came down, went up, came down, went up, came down. This is a low, mind you. This is one low. This is another low. Like this. Can we call this M and W pattern? Have this. So the market went back, pulled back, and boom. Good. So you can see how it works. So all you need to do now is make it an effort to study how to create how to identify support and resistance, clear support and resistance, where the market will come reject, will possibly reject, and you might see a continuation of price in that direction. Let's see if we can find other patterns. Now, these are the patterns I would recommend you guys to put an effort in mastering. Double top, double bottom, M and W pattern, double top, double bottom, triangles, the bearish triangle, bearish triangles, bearish triangles, symmetrical triangles, because these things are a bit complex if you don't stick to one or two. Just get you confused. Triangles, we have the bullish triangles. So let's start with the simple parts. Let's start with the simple part. But my first recommendation is a double top and double bottom. Double top, double bottom. So you can have a combination of indicators, price actions. Let me list them out for you guys. Indicators. And under the indicators, moving average. Moving average. Under support resistance. Support and resistance. Use Fibonacci. Fibonacci, use price action, support resistance, which is the manual way of identifying it, like I just did. What other thing again? Support and resistance. For entries, chart patterns. Chart patterns. Exits. Still the same chart patterns for exit. Chart pattern. So with this little thing I've given you guys, you will know where to focus on. Not beating around the bush. You just know the things you need to do. Then now on these chart patterns, make sure you understand, pick 2 chart patterns for each, just 2 chart patterns. Work with just 2 chart patterns for now. So let's make the development easy. Work with just 2 chart patterns for now. You can decide to do double top, double bottom, and the triangles only, or you just do double top, double bottom for now. Do double top, double bottom, M and W patterns for now. Then on the chart patterns, yes, do the same thing for entries too, double top, double bottom. Now for your stop loss placements, if you're doing M and W pattern, let's assume this is what we're looking at. We're looking at this, this, and a break above it. Your stop loss should be here. If you enter here, your stop loss should be below the W leg. Let's see if we can see M pattern. Let's see M pattern. See, at a resistance or support level, let's see if we can find. Okay, break. Let me see this. Now I'm looking at this line here, this one. That's a resistance. So let's go to 1 hour and see if we can find anything around it. So you can see I'm leaving the higher time frame to the lower time frame. Now, can you see this? Even though price didn't come back. Can you see this? Okay. See, on the break of this, we're supposed to see this happen before we see a sell. But market didn't come because this was a news event. These were fundamentals. So it pushed in with a very strong push. These were fundamentals. Market didn't come at that time. So let's see if we see a normal market condition. We can find one normal market condition that brought about that. Support. We're looking for support. Break structure. Come on, that's okay. Let's slow. Looking for a clear market break. Clear market break. Let's see if I can find one here. I don't want to go back, looking for. Okay, let's do this. Let's see this place. Here. 1 hour. Okay, so let's say this. What you'll be seeing is even W pattern majorly. You barely find the M pattern. M pattern is on the top. W pattern is at the bottom. That's why we call it. So you should be seeing something at the top and not the bottom. Because what we'll be seeing here will be W pattern. We need something at the top. Something we'll find at the top. Looking for this. And okay, for the market will have dropped now. I don't want to. I want an area of, okay, let's use this for example. The price has gone price has gone backward from there. So let's say around here. Let's see if we can find it. Let me see if I can find it. Now, price has really gone back. So it's not even taking us there. Okay, I think we're here now. This is it. Now, this is what we're looking at. This was broken. So we're expecting the market to contest this line, and as you can see, it came back, and here our stop loss would have been here. And see the drop. At least you have taken profits. Let's see here. You have taken profit here. And this level. And I think it gave us, yes, you get here profit from here to here. So guys, do you now understand this? Please, I would advise you work with M and W patterns for now. Let's work with the M and W pattern. Do you understand? Let's work with M and W pattern.
Yes.
This is 9:46. I've taken much of your time already, 16 minutes more. Please, I want us to stop here for today. And tomorrow, we'll hardly do some things. If you have questions, yes, one thing you need here is patience. True, Samuel. What you need is patience. And this is where they say discipline and patience are key parameters in Forex trading. You need to just wait and make sure these things happen before you take action. Your money is important, though. Do not lose accounts anyhow. Tomorrow, by special grace of God, we'll continue with a deeper understanding of this before we dive into tomorrow's topic or tomorrow's section. This is a very complex thing. Like 1 hour, 2 hours won't be enough. So we're going to be doing this on a repeated level. Do you understand? We'll keep doing this. Like I said earlier, you guys can contact me privately if you need help. So we'll work around it and find what works. Just tell me what you're trying to do and we'll see how we can create a work frame around it. Do you understand?
Yeah.
Okay. So I want to know if anyone has any question regarding what we just talked about before we end the class. Any question?
I would like to say 1 or 2 things before you
Alright,
end the
sir.
class. Thanks.
Go ahead, sir.
Oh, good evening, everyone. I welcome you all once again. That has been a wonderful lecture by our trainer, Raphael. Thank you very much. You are wonderful.
Welcome, sir.
And to all of you that have been able to be very, very committed to this webinar, we appreciate you all. We appreciate you all. Like I always say, for you to be a good trader, you need to have what we call PhD. It's not the PhD doctorate degree. It is a phenomenon of explanation on the basis of patience. You have to be very, very patient. You have to be hardworking. Hardworking in the sense that you do more research. Not that what is being taught here is enough to make you a very, very good trader, but you have to work on your own and make sure that you grow. And the third one is D, which is discipline. You have to be very, very disciplined. Money is money is not easy to come by. It's not easy to come by at all. So anyone you have, please make sure you trade gently with it and trade cautiously so that you don't lose it. We are not happy when you lose your money. So let's know that. So once again, I welcome you all. So we are now going to the ending part of this webinar. It is very, very compulsory for all of you to open your live account, which is very, very important in this training, so that you'll be able to follow our analysis channel, for you to be able to take your trade with some of the analysis, you take advice, you follow up on some things, so that one will be able to guide you to know what trade to follow up on. So your live account is very, very, very important. Very, very, very important. So if you have not yet registered your own live account, we have our WhatsApp group where we share the link for you to get registered. Please, if you are not in any of our channel, Telegram or WhatsApp group, please kindly chat us now. We will drop phone number for you to contact, so that you'll be able to, you will be added to the group or the channel at the same time. Because it's from the channel you see the analysis, and it is in WhatsApp group that you receive some trainings at times. So the minimum deposit you can make, it all depends on you. If you can deposit $100, fine. If you can deposit $50, fine. But we would like to encourage you. We like to encourage you. So it's very, very important to get your account funded. So use the link in the group to create your account. And if any one of you who is here and you have already registered with another link, please let us know, so that we'll be able to help you and know how to assist you. Thank you very much, and God bless you all.
All right, guys. Ame. Is Ame there? I think he's not around. Oh, sir, can you kindly drop your number for those who want to join the group? For those who want to join the group, sir.
The number is already there.
Okay, okay. So please, for those who want to join the group, that's the WhatsApp number. Chat him up on that number and you'll be added on the group. Chat him up and you'll be added on the group. And I don't know where Ahmed went to, but whichever way, please, Apostle, help me out with something. Remind me tomorrow of the Fibonacci ebook I said I was going to add to the group. So let's know how many people are willing to be a part of it. All right, sir. Thank you so very much. So in the absence of nothing, I want to say a very good night to all of us, and we so much appreciate you guys for spending this time with us. Please, to everything we have learned so far, let us go back and do a revision on them. Let's do a revision on them. There's a number there. There's a number. I dropped an ebook this evening on the group. So I know some of us will be added late, so you probably might not see it. I'll reload the book tomorrow too. I'll put that book there, so you should be expecting 2 books from me tomorrow. For those who have this new one, the book I uploaded today, you have that, so you just be expecting the Fibonacci ebook. And for those who don't have, you have the 2 to download tomorrow. So please don't just download and keep it. Download and go through. Download and go through them. From there, you begin to ask questions. You begin to ask questions on becoming a master to trading. Do you understand? I want to believe we have nothing more to add and nothing more to take out of this. So that's the number. For those who are still asking. Abdul Salam, that's the number. You can chat him up on WhatsApp. Yes. Okay, good. Perfect. So I want to say good night to all of us, and we wish us a wonderful night rest. Tomorrow, another day. So let's meet up here same time tomorrow. Thank you so very much, and God bless you. Why am I not seeing the number? Igor, you should be seeing the number. The number is there now. You're welcome. Somewhere you're welcome. The number is there. I'll paste it again. Or let me send it to you privately. Wes, you're welcome, Imo. Now, can you see John Igbo? Can you see it? Okay, good. So chat him up on WhatsApp, please. All right, you're welcome. You're welcome. All right, then. So do have a wonderful night and see you guys tomorrow. See you guys tomorrow.